Hello everybody. Today's video we are talking about common reporting standards and the DAC7 regime. So there's been some recent changes to this and we need to update everybody, especially UK expats, make sure that you're complying and what you may or may not need to do and how this affects you. So it's Paul and Matt here from Fiduciary Wealth, another video. As always, there's plenty more coming, so make sure you subscribe to our YouTube channel. But for today's video, Paul, CRS and DAC7, maybe a brief outline of what it is and these changes that have come in, please.
Yeah, major changes coming in terms of, so this is a very short policy update, but major changes ahead in terms of CRS, Common Reporting Standard, and DAC7, which is a directive on administrative cooperation. And it is a directive, a EU directive between the national tax authorities of all EU countries, which goes over and above common reporting standards. So I think it was designed to plug any holes in the common reporting standards, which is of a more global nature. So UK is not obliged to follow DAC7, but actually does. It follows DAC7, implements it as law with some national variations to take into account that we're not fully fledged members of the European Union anymore. So it means that it makes some changes and tweaks here and there to take into account the realities of the UK economy. And it normally lags any changes to DAC7 by about 12 months. So they consider the changes and then evaluate and then redraft. So no, UK is subject to CRS and to DAC7. CRS, as you know, Matt, is a common reporting standards adopted by large and small nations alike. Small nations and offshore centers were all bullied into signing up. Even countries across Africa are signatories to the Common Reporting Standard. And like any other new regime for global transparency, they design it and then they realize there's holes in the reporting, and then they extend the regime to plug those holes. So now what Common Reporting Standard and DAC7 are doing essentially is that they are realizing that people hold assets in crypto, which was not previously captured by the directive. So now they are addressing that issue. And when I say crypto, it covers a lot of ground. We're talking about stable coins. We're talking about your typical, the Bitcoins and the crypto Ethereum. We're talking NFTs.
NFTs, yeah,
NFTs,
digital wallets, all the lot,
digital wallets. So I think it's it does cover a lot of ground, and it comes into effect. That common reporting standard I believe is in 2026, maybe 2025, but I think it's probably implemented 1st of January. E-money, digital wallets, CBDCs, crypto. So that's a major development because, people were holding assets and not declaring it to the tax authorities, and they could get away with it given that there was no reporting requirement. And the issue is whether moving assets across wallets, which are anonymous, whether that is still going to be allowable, or whether the wallets are deemed to be the platforms and therefore are obliged to do the reporting on behalf. But as you know, the wallets are, there's no names. It's on a no names basis. I believe you're given a code or given some kind of access to your wallet. But so there has to be some reforms and some changes, whether the platforms and the digital wallets, whether they have the technology to remains to be seen. But the idea is that it now captures, crypto, stable coins, NFTs, DEFIs and positions and digital positions and so on and so forth. So that's one major development. The second one is that under DAC7, if you're holding or renting out property in a platform, whether it's booking.com or Airbnb, again, in the past, there was no means of reporting, which means that you could either underreport your rental income or not report it at all. That is my understanding. I'm not an expert in this field, Matt, but my understanding was that people could underreport rental income or could potentially not make any declaration that they were in receipt of rental income. So landlords now need to make sure that the rental income is completely aligned with the tax returns and that everything matches, because the platforms are the ones now, in the same way that when CRS was implemented, the trustees and the practitioners were the ones obliged under the standard to make the disclosure across borders. Now it falls on the platforms to disclose what rental income has been paid out and to whom. And the question is, and I'm not sure because we haven't researched it enough, is whether that includes second homes and investment properties globally, whether these get reported somehow. But if they don't, they will at some point. Let's make no mistake. This is about capturing every type of asset, including hard assets, including real estate, and of course, digital cryptocurrencies, which were below the radar. So it's a major development. I think people have to be aware that these changes are going to change the landscape, because a lot of people were building their net worth by having investment properties in exotic jurisdictions and getting rental income, no tax, because those jurisdictions didn't tax rental income. Some people were hiding some of their assets in crypto, whether they were through legitimate or illegitimate gains, God knows, but these are going to be reported, and as a result of that, one would think that the tax authorities, HMRC, EU, US, wherever that may be, are going to have to start, issuing notices, or they call them, I think, nudge letters or audits, saying we have reason to believe that you're holding crypto, we have reason to believe that you have rental property and you're in receipt of rental income. Please explain why in your previous tax return there has been no declaration. And I think our viewers need to be conscious of the fact that that could become a problem if indeed they have those assets which are below the radar. So it'll be interesting to see how this progresses, because I don't think it's an overnight thing that they can roll out. Who knows? Maybe the platforms already have the technology to do the reporting, but certainly, whether it's property rentals, e-money, crypto, all that is going to be now, whether it's held domestically or overseas, they're going to be reported. There's going to be tighter cross-border scrutiny, and you have to fully comply by 2026, because if you don't report it, someone else is reporting that data. And if your tax returns are not aligned, you'll get the nudge or the, from HMRC or another tax authority saying, look, we have reason to believe you're holding assets. And if those assets are not assets that cannot be explained, because it's not, how can I put this, money that has been or wealth that has been built over time, and you've legitimately paid your taxes, it could raise other issues.
Yeah.
What is the source of that wealth?
Yeah. No, I think our advice has always been declare everything anyway, but
Yeah.
you do get the odds one or two people to say, well, how do they know about this? They know, don't they? And even assets which maybe in the past they didn't know, now they will know. And it makes sense to update it. Digital assets specifically becoming a lot more mainstream now, and the tax authorities need to kind of catch up on these things. Because I can see how people may look at that and think, oh, how do they know I hold this? As you say, the way the wallets are held and stuff. But yeah, we're super cautious anyway, aren't we, Paul? Declare
We are.
everything, pay your tax, and then you can sleep well at night.
We are very boring. We
Yeah.
will we
I
will
was trying.
mitigate.
Yeah, I was trying to use a different word, but yeah, I think that's what it is. Yeah.
No, we are yeah, we are creative. We mitigate tax as far as we possibly can, acting creatively, but always um, within the law. And if it's not within the law, then we're not the right people to approach.
Yeah.
So
And the beauty is, I guess, when you're talking about things like crypto, because there are people we've come across them who've made huge gains on this. You're in Gibraltar, no capital gains tax in Gibraltar for so maybe a relocation is on the cards rather than, you know, hiding these things from people. But
no, that's a
um,
very good point. I mean, if we become tax resident in Gibraltar, then it gets reported, but there's no capital gains. And if you're tax resident, you don't pay. So where does it get reported? Some platform will report it to Gibraltar. Gibraltar will look at it and say, okay, it's legitimately um, it's not a taxable event, assuming that Gibraltar doesn't now start applying capital gains tax, perhaps at a very low threshold. Who knows? Everything to play for.
everything to play for, and we cover it all in our other videos. So that's why people need to subscribe, right?
Absolutely.
Perfect. Okay, great. So you've heard that, everybody. Subscribe to our videos, like, comment, share these with people who have a similar interest as well. And we will return with more content soon. But thank you, everybody. Goodbye.